If you want to start investing, the big problem is always how to start. And I know that many people out there will be told to buy exchange traded funds, ETFs, and do it yourself DIY investing, including myself. But that's because I already understand what I want to invest in, and I do understand the details of such financial products. For many beginners out there, they may not even know which ETF or funds to invest in, and more importantly, why invest in them. So today I'm collaborating with UOB Asset Management Limited, short form UOB AM, to share how you can use their digital mobile app UOB AM Invest to start your investing journey today. Let's talk about the unique selling point of UOB AM Invest Digital Advisor, short form we call it DA. This is where investors can leverage investment experts to manage their portfolio for them. The advice is the portfolio recommendation based on the risk assessment questionnaire. In fact, DA is not just about those who do not know much about investing, but also those who are too busy to manage their portfolios, because you should know by now that managing your own portfolio takes up a lot of time. So the digital advisor uses algorithms to tailor investment solutions to the individual goals, risk profiles, and investment period, employing mainly ETFs and funds for diversification. It also offers scenario analysis tools to assess goals achievements likelihoods. So to put it in a simple way as an analogy, you can think of it like hiring a digital financial advisor for a fee to help you invest better. And also thank you to UOB AM for sponsoring this video, and I shall share about the welcome rewards for new customers. For new UOB AM customers, you may get 10 Singapore dollars cash credits when you make a first deposit of at least 1 Singapore dollars into the UOB AM Invest account. But take note that from 8th to 30th September 2023, the first 50 users who use my unique link and invest at least 1,000 Singapore dollars into any of the specified portfolios and stay invested in the same portfolio or fund till end of October will receive additional 40 Singapore dollars cash credits. The specified portfolios are core portfolios, which consist of Build My Wealth or goals-based, satellite portfolios like the Megatrends Portfolio, and also Funds Direct. In total, you will receive 50 Singapore dollars of cash credits when you deposit and invest at least 1,000 Singapore dollars with UOB AM Invest, giving you a head start in investing. But the more important question is, how much are the fees? And I know many of you are concerned of the fees because cost is guaranteed, but expected returns are not guaranteed. For UOB AM Invest, it is charging 0.8% per annum for a portfolio of 25,000 Singapore dollars and below, and 0.6% per annum for portfolios of above 25,000 Singapore dollars in value. Now, if you compare to other digital advisors' management fee, 0.8% per annum may seem high, but when you look at the 0.6% per annum for above 25,000 Singapore dollars portfolio, it is actually around the market rate for cash investments via a digital platform. And if you want to compare further, let's take a look at some of the other robo or digital advisor platforms offered by our local banks. If you look at Digi Portfolio by DBS, it is charging 0.75% per annum. And if you look at OCBC Robo Invest, it is charging 0.88% per annum. So when you look back and compare with UOB AM Invest, charging 0.6% per annum, it is considered relatively affordable if we compare to the local banks. Another good thing about UOB AM Invest is that you can start investing from as low as 1 Singapore dollars, which is one of the lowest minimum investment amount in the robo-advisor market. Next, let's talk about the portfolios offered by UOB AM Invest. Starting with the core portfolio, I'll talk about Build My Wealth, which is a personalized portfolio based on your own requirements, example like your investment horizon and how much you decide to invest regularly each month or a lump sum. So for my own portfolio example, here is what I have inputted. I have an aggressive risk profile with $500 investment per month. So my allocation will be 54% equities, 44% bond, 2% cash, and the expected return is around 6.7% per annum. And based on the average market return, I will have 533,000 after 30 years of investing. And let's say in a poor market returns environment, I will still have 341,000. Note that this is all based on $180,000 of invested capital, which is still quite a significant gain, right? Considering that if you did not invest your cash, you will still lose the monetary value to inflation. The next option under core portfolio is called goal-based, where you can set your own financial goals, like for retirement, for wedding, or renovation, for buying a house. And for my example, I'm going to set a retirement goal. So my current age is 32 and assume that I want to retire by 60 years old. And I do want to have a monthly payout of $2,000 per month. Assuming that this $2,000 will just come from UOB AM Invest, and I do have other sources of retirement funds. And I'm expected to live till the age of 85, which means I need 25 years of retirement funds. But I'm only willing to invest $300 per month. And with my aggressive risk profile, my expected return is only 6.7% per annum. Continuing with this situation, I only have a probability of 33% to succeed and achieve my goal. So realistically, this expectation is not working out, and I either have to 1. Delay my retirement age, or 2. Increase my contribution to my retirement funds and investment portfolio. So let's change some settings with my goal. Firstly, if I delay my retirement from 60 years old to 65 years old, this will help me improve the probability from the previous 33% to the current 78%, which is a very huge jump. And number 2, what if I still want to retire by 60 years old? Then the other way is that I increase my contributions to the investment portfolio. For example, I'm going to increase the contribution from $300 to $500 per month. And looking at the probability, it has now increased to 90%, which is a higher chance to succeed. So that's how a goal-based portfolio will help you see whether you are on track to retirement based on the probability. And you can see that there's a tracker down here, and it will show you how near are you on track to hit that goal and to keep you motivated to strive on for success. So if you were to ask me, is the Build My Wealth portfolio better or the goal-based portfolio better? I'll say that they are rather different, because the Build My Wealth is a bottom-up approach whereby you set your assumptions and your requirements, then a goal will be set based on what you have inputted the data. Whereas for goal-based, it is a top-down approach whereby you set the goal first and then you work backwards to adjust the assumptions and requirements just to show how far are you on track. So these two portfolios are really important and useful to see how investors can set their own financial expectations. Next, I'll talk about the satellite portfolios, and in particular, the Megatrends Portfolio. Why it's called a satellite portfolio is because you want to settle your core portfolio first. That is your basic. That is your fundamentals. Whereas for satellite portfolio, you are going to take a significantly higher risk. And for this risk appetite is labeled as very aggressive, because the Megatrends portfolio is the long-term investment managed portfolio that is curated by UOB AM's investment professionals. The key 3 megatrends consist of changing demographics, go green, and the digital economy. The portfolio enables its investors to gain exposure to some of the most exciting companies in the world today. So you can think of it like a thematic portfolio where the UOB AM investment professionals have already helped you source the next megatrends, and the current top 10 portfolio holdings include companies like Tesla, Cisco Systems, Netflix, and Meta platforms. So this is definitely a higher risk portfolio compared to the core. But if you really think this is not enough, UOB AM Invest also offers the Fund Direct portfolio, where you can choose from selected UOB AM funds listed in UOB AM Invest, and you can make your own decision on which fund to go for, depending on which region you prefer, which industry you think is more preferable for long-term growth. And there is also a United SGD Money Market Fund if you prefer a lower risk option. So after going through all these portfolios, here are my opinions of UOB AM Invest. I think the core portfolio is quite educational for beginners to start out. It's kind of like they're holding your hand to guide you through the complicated world of investing. Once you have secured your core positions, then you may move on to higher risk portfolios like the satellite Megatrends portfolio. Or if you're more comfortable on managing your own portfolio, then you may try Funds Direct. You may have the question, is UOB AM Invest for everyone? I'll say it's great for people who want to start out and learn investing. It is also great for working professionals who are too busy to manage their own portfolios and prefer to let someone manage it for you. If you're looking to trade specific stocks, then maybe UOB AM is not for you, as it is not a trading platform. But otherwise, it can still be as a form of diversification. Like you don't want to hold your entire portfolio on one platform, you want to diversify those platforms. I think UOB AM is a good option. And I would say the digital advisor is really great for you to do passive investing through dollar cost averaging, so that you can just set it aside and it will invest automatically for you. By using the UOB AM Invest app, you may also learn about your own financial expectations better and structure more realistic goals based on your own situation. And do use my referral link down below to sign up and invest 1,000 Singapore dollars so that you can get 50 Singapore dollars of cash credits, giving you a head start in investing. And if you want to learn of other investment methods of dollar cost averaging, do it yourself, then you may refer to my previous video right here.